good place to start is just talking about Nvidia, and I think your take on how, what you thought of the quarter, and how it came in relative to your expectations and put them up.
Yeah, look, Tom, I mean, I think that it was probably the most anticipated earnings that we've seen, I don't know, in a decade or ever, right? And in terms of watch parties and everything else, for Nvidia, just take out the noise in terms of numbers and in terms of what happens. Blackwell delays put to rest. Think about all the agita over the last few months on that. And that's similar to what we're seeing in our checks throughout Asia. Demand, we believe demand's outstripping supply 12, 15 to 1. And nothing we saw from numbers or metrics makes me think that that's dissipating. Now look, in terms of like whisper numbers for the quarter, 33 billion, 33 and a half, they got 32 and a half, slightly below whisper, stock gets hit. We look, 2 billion beats, we believe are probably likely here, right? But they're not, there's no reason that Jensen and the team are going to guide to anything near that, especially in a Blackwell type quarter. And I think you walk away, the demand thesis is accelerating. Yields are improving. And ultimately, I think it sets up for actually the next leg of the story. Now, look, I get where like sell-up happens, investors be like, oh, is this it? Is this over? It's second inning in a 9-inning game in terms of overall AI, because it goes back, and this is the most important, if there's anything anyone takes away from this call, it's for every dollar spent on an Nvidia chip, the multiplier for the rest of tech is $8 to $10.
In a world where stock market narratives can flip and transform by the hour, one name continues to resonate with unyielding prominence: Nvidia. This behemoth in the tech arena is not merely another entity. It stands as the symphonic centerpiece in the grand orchestra of artificial intelligence advancements. As the broader market has been consumed with turbulence and unpredictability, Nvidia has charted a course of ascent that has captivated both investors and analysts alike. The remarkable journey of Nvidia's stellar stock performance has achieved truly jaw-dropping heights. Over this past year alone, its share price has skyrocketed by approximately 180%, a staggering statistic that would quicken the pulse of even the most experienced and savvy investor. These whispers of potential have transformed into a melodic crescendo of validation, demonstrated through Nvidia's astronomical growth rates, which have positioned the company at the very core of the financial universe. Yet, with every meteoric rise, important questions loom on the horizon. Can this formidable titan in chip technology sustain its thrilling trajectory? The market murmurs with curiosity, as investors like yourself grapple with discerning whether Nvidia represents an ironclad, IP-rated superhero or merely a market darling operating on financial steroids, potentially susceptible to future market corrections. Welcome back, everyone, to Investocracy.
Well, I mean, Nvidia is still at the center of the entire transformation that's coming with AI, and Nvidia continues to be one of the leading companies. So, from a long-term investor perspective, I think anyone should look at Nvidia's congestion and consolidation as opportunities to add if they don't have exposure. And then I think for anyone else, it's just a time to be patient, because of course stocks don't just go straight up.
We'll go. There are a couple stocks, however, moving higher. Nvidia is up about 3%. Yes, almost 3%. The company hosting a 3-day summit in Washington starting today. It's up 25% over the past month. That move has pushed its market cap back up above $3 trillion and passed Microsoft into second place behind just Apple.
As the curtains drew back on this mesmerizing financial stage, Nvidia emerged into the spotlight with an AI-driven flourish that defies traditional financial metrics, displaying a stock performance that could make even the boldest algorithms blush with envy. The company's revenue shot up by an astounding 205% year-over-year in the first half of fiscal 2025, with earnings per share soaring by an equally impressive 285% over the same period. For the skeptics in the audience, one might jest that Nvidia's financial growth trajectory could provide the adrenaline rush of a roller coaster ride at even the most adventurous of amusement parks. However, these figures are no mere illusion. They are the undeniable hallmarks of a pioneering trailblazer, carving its own formidable path in the expansive realm of AI advancements. Financial analysts, armed with their meticulous analytical acumen, have scrutinized Nvidia's metrics with a precision akin to that of a hawk's eye, noting that the forward price earnings to growth PEG ratio stands remarkably at a mere 0.36. In traditional stock analysis, a PEG ratio below 1.0 typically indicates a stock that may well be undervalued. In this regard, Nvidia not only meets, but far surpasses these expectations. It is as though the data itself is shouting from the rooftops. Value is here for the taking. Even in the midst of the global cacophony of supply chain woes, Nvidia's blend of innovative finesse and market dominance has inspired confidence throughout the investment community, instilling a renewed faith in the potential for continued profitability. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
News of the day this morning, we're buyers of stocks on Friday, but even stronger if the jobs report is soft. The implication being you're buying no matter what. So it wasn't soft, it was hotter than expected. But nonetheless, why did you come into today thinking you were buying stocks regardless?
Well, there's a couple reasons, Scott. The first is that I think markets are much more focused on inflation reports and CPIs next week and the June FOMC meeting on Wednesday. And the second, which of course we think is going to just show a continued improvement in inflation. But the second is that stocks really historically have done well in the week following the release of the employment report, rising roughly 70% of the time. And it implies roughly 70 to 80 points in the S&P. Of course, it would be better if it was a soft jobs report, and it wasn't.
Well, it's funny you say that. It would be better if it was a soft jobs report, because I think the market spent a good amount of today deciding, what it was. Was it good news is good news is bad news? I mean, if the market doesn't necessarily need rate cuts, why is a softer report better? Why can't we just be happy with good news? Labor market's strong, economy's hanging in, don't need rate cuts, and still may get them later this year.
I generally agree with you, Scott, but as you know, there's a faction of both market participants and the FOMC that view some of this data as too hot for them to be comfortable with. And I think, the more positive data points you get, the more you might actually start to see markets pricing a hike. And so I think you're right. There is a Goldilocks window, but it's safer to say bad news is good news because those actually clearly take away inflationary pressures.
As Nvidia continues to add fuel to the ever-blazing AI bonfire, the anticipation surrounding its next-generation Blackwell processors holds the promise of yet another major leap forward in technological advancements. Technology enthusiasts, industry experts, and Wall Street analysts alike gaze at these upcoming developments with starry eyes and slightly increased heartbeats. Whether it is on Wall Street's trading floors or across social media platforms like Twitter, the buzz surrounding Nvidia echoes firmly across continents. Nvidia is certainly no mere tech small fry. It is, in fact, the vital nucleus at the very core of AI evolution. The only constant in the inherently complex world of market dynamics is change itself. Yet, even amidst this ever-shifting landscape, Nvidia is optimistically viewed as having substantial room for continued growth, despite the inevitable eventual slowing of its meteoric rise. Conversations emanating from research hubs and casual industry chit-chats alike suggest a cyclical yet positive trajectory for AI-driven innovations, passionately spearheaded by none other than Nvidia. Iconic actor Arnold Schwarzenegger's famous cinematic line, "I'll be back," might well find its most profound corporate embodiment in Nvidia, as the company confidently asserts its dominance over the ever-expanding AI landscape, poised to make yet another triumphant return. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I'm wondering if you think in any way that, thinking that June is going to be the point of the year in which we start to get this money off the sidelines and into the market, and how Goldman Sachs framed it the other day, talking about a, quote, wall of money coming in, but not really until July, that you could have some selling between now and then, but that the beginning of the third quarter and thus the second half of the year is the area to really plan for a wall of money coming into this market and then pushing stocks that next leg higher.
Scott, that dynamic is certainly at play for a couple of reasons. One, April was a down month, and I think a lot of institutional investors actually sat out May thinking April was the start of a bigger correction. So June is when money starts coming back in. But I think more importantly, since the end of 2022, I think a lot of institutions and a lot of high net worth individuals sort of sat out this market saying, hey, I'm happy earning 5%. By the middle of this year, if the S&P is up 15%, on top of missing 30% last year, I think a lot of folks are going to say, listen, I can't just sit on cash and earn 5% anymore when I'm missing out potentially on a 25% year for the S&P.
Tom, what'd you make of the fact a couple times this week we had rates go down and stocks go down? Not exactly the dynamic that many had been expecting, right? Because that's not the way that stocks and rates have been reacting, right? They've been pretty well correlated. Rates down, stocks up. Well, there were a couple of occasions this week where that didn't work. Why?
It's kind of hard to tell, especially day to day, but if I had to guess, we don't want to be in a situation where the economy is slowing so much that we've actually hit stall speed, so rates would go down. That type of economic dynamic would scare stocks. So it's almost like bad news is too much bad news. In fact, maybe that's why today's jobs report kind of fits right in the middle, because it's actually good enough to tell us the economy is still strong, as you said, but it's not enough to actually add to inflationary pressures.
Tom, what if this market is just screaming out it's Nvidia's world and we're just living in it, right? I mean, if Nvidia's up, markets are good. Nvidia's not doing much. S&P can't do that much. Nasdaq's negative today. It's a one-stock story.
I mean, Nvidia is really a generational story for now, because, I mean, how many $3 trillion companies actually have doubled, so clearly Nvidia is important, but it's important because it's really one of the most important ways to get exposure to AI. And I think the AI story is, early innings, as many people talk about. It's transformational in terms of productivity, and there's a lot of use cases developing. So as much as it might feel like a one stock market, as you know, there's a lot of stocks up more than 20% year to date. And I actually think breadth is likely to increase. So for investors, there's a lot of opportunities in the second half.
The present moment is undoubtedly ripe for investors to gaze upon the horizon with keen insight and consider the enriching possibilities of an investment in Nvidia, a stock whose current brilliance illuminates a dazzling array of future potential. While present growth rates may not maintain their ferocious and blazing pace forever, they serve as a vibrant prelude to a new chapter characterized by sustained and enduring excellence. As Nvidia strategically gears up for its anticipated upcoming processor launch, the allure of its stock only continues to magnify, capturing the imagination and financial interest of a global array of investors. At this very moment, Nvidia stands proudly, trading amidst a high, yet justifiable, valuation. Current market forecasts, along with promising industry advancements, paint a vibrant and hopeful picture wherein Nvidia not only survives, but thrives and indeed leads. Should you seek alternative evidence to this compelling narrative? Simply glance at today's remarkably compelling numbers, absorb the overwhelming industry praise extolled upon Nvidia, and follow the roadmap punctuated by ambitious and innovative advancements. All signs that Nvidia is indeed heralding a new golden age of AI. Therefore, fellow investors and tech enthusiasts, where do you stand in the midst of this heated conversation regarding AI ambition and financial foresight? Do you envision Nvidia as the future torchbearer in the vast and ever-evolving realm of technology? We invite you to engage with us, share your insightful thoughts, join the enriching discourse, and be a part of this evolving narrative. The epic tale of Nvidia's remarkable journey remains largely unwritten, inviting your unique voice to add depth and insight to its unfolding saga. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.